Trader Mawira here, back with another one, and today it's gonna be extremely interesting. So I want us to do something where we're gonna reverse engineer this trade, the beautiful trade that is right, is on the charts right now, and we're gonna go back and see the underlying story of how this trade came about and how it would have, how we would have been confident in taking it and knowing that there was a high probability that it would work out. So this right here is me just looking at a trade on through our insight on something that's already happened, and this with doing this, it should help you, or rather help us with pattern recognition. In that our pattern recognition skills become much better because we are reverse engineering and trying to see what are the building blocks that led up to where you are able to comfortably take that profitable trade. So let's go check it out. So now, as you can see, I'm gonna do a recap. I've done this thing over and over my previous videos. Just go check it out. So this was a long setup, and this was extremely textbook. So because we have a low and a lower low and a lower high, and that was step one, part one. Step one, number one, low, lower, low, lower, high, and then a break of structure, number two, and then number three, we anticipate for a new high to form, and when that forms, we take our fib entry from the lower high to the new high, and we wait for a 0.62 entry, which happened here. So if I was to take my fib from the lower high to the new high, there we go, that was our entry at 0.62, and then our stop loss below the lower high, and our targets are 0.62 standard deviation right here. We take off right there, we take off 80%, and then we break even. That means we reduce our risks. Our trade becomes risk-free, or you might even want to put your stop loss inside the trade, where if it comes back, you just don't get a zero on that runner, but you also make something. And then we close our full trade right here at of number one out of a full symmetrical swing or full standard deviation. So now let's get rid of this. Sorry about that. Let's get rid of this. Let's get rid of that. And then I want us to jump to a daily time frame, where we'll see where this story adds up to where we got to this point on the 1 minute time frame to comfortably identify this trade and take it. So let's go to the daily time frame, and these are levels that I have from other days, but the level I want us to look at is this one right here. This is just a candle that just opened an hour ago. So this was the trading day right here. So I want us to note this right here. So I want us to note, because this is where this was this was the previous day where we're going to be looking at that trade, and this is where it opened here, but we had a wick that came down, and then there was a reaction from this point. Let me just get rid of that. This is the one that I want us to look at. So now I want us to look at this down candle where the market went up and then the market came crashing down, right? And this right here is I would like to call it a breaker. And so what I did is I took that closing price and I put a line and brought it all the way across time up to here, right? Now, as you can see, what was happening on previous days, that acted as resistance, and then we broke through that resistance. Market came down but was not able to hold, and now the resistance became support and we shot up. But I don't trade support and resistance, but those are nice things to look for. So I call that line a daily breaker. So there it is, and we're gonna see it when we go to a lower time frame. So now let's head over straight to the 5 minute time frame. Okay, so now we're on that 5 minute time frame. As you can see, I trade from 10 a.m. PST, right? So now previously at 7:40, this down candles formed, right? That pierced through that daily breaker, and then look what happened. Price shot up, right? So that tells you that there is an interest in the market going the other direction. So now what I'll do is let's delineate this as right there, and let's name it, it's a 5 bullish. What you doing, brother? 5 bullish order block right there, bottom. So that was the last down candle before we saw this thing go up, and then we're gonna take a rectangle and delineate that and call that a 5-minute fair value gap. I'll just write in number 5. So already, as you can see, we're now forming something interesting. This becomes true support and support, true support, support and resistance, true resistance, support and blah blah blah. Now as you can see, what happens here, we're still not taking any trades, right? Because I'm coming to my charts way after. Now look at this down candle, market shoots up, comes down, finds support in that fair value gap, and then reacts and goes up. Now I want us to note something, right? Look at this other fair value gap that's way up here, and then let's extend it out in time. Now this is something that I've noticed, that when I have a setup and I take it and price bounces off, if there's another fair value gap, price will usually come and start acting, that fair value gap, or rather that imbalance will start acting as support and resistance. As you can see, the market, there was some resistance right here, and then came down, found support on that 5 fair value gap right there, shot up, found support, and then shot up again, right? As you can see, the market is coming down, so we do expect the market to touch that area and bounce off again. But I do not trade support and resistance. I like trading, I prefer to trade ICT concepts, but it's good having those having that knowledge, because these fair value gaps, as I've learned from ICT, they do offer you that true support and resistance that is extremely, I believe, important in trading. So I want us to now go down to a 5-minute. So I like to name this a 5 stage staging. I just write it a 5 to show me that it happened on the 5-minute time frame. And then I like to name it staging because I expect the market to bounce off of it and go to one direction or the other, right? So now let's go down to a 1-minute time frame, and now this is where that setup of ours formed. And then look what happens. Our 1-minute plan comes through, and remember, we still have another underlying storage. So we have all these building order blocks, to whereby if now we see our setup form, we're kind of sure that it's a solid setup. And it happened so beautifully that it was just textbook trade. So we're going long, so we are looking for a low and a lower low and a lower high. We have a low, a lower low, a lower high, and then we have a break of structure, which happened right there. SBS, a market structure shift, and then we wait for a new high to form. And how we confirm a new high is when market starts retracing down. When that happens, we now set up our trade, where we take our fee from the lower high to the new high, as it says on step 2 right there. Our entry is going to be at 0.62, which is our entry would have been right there, and our stop loss goes below the lower high, at or below. And then our first target is 0.62 standard deviation right there, and then our final target is at 1, and that is where we collapse our whole trade. So that was an extremely beautiful trade, and then we had all these other underlying factors that led us there. So that was an extremely a remarkable way to look at price, and that can be something that you can be looking for once a week. There are many variations, but this one right here is textbook, and it rarely it will form, but it won't be this straightforward. But when you see this, what's happening, but when you see this, then you might want to consider taking that trade. Now, I want to show you something, right? So when this leg went up, right, and it start, so we did form something right here. So we formed a fair value gap right there, and now we're on the 1 minute time frame, right? So now we have this down candle, which now becomes a 1 minute order block after the market propelled to the upside, and then it comes down and finds support on that 1 minute fair value gap, finds support, and then again finds support and shoots up. Now let's look at this area. Now what do you see right here? Let me get rid of this. Now inside here I'm seeing a down candle, and then I'm seeing this displacement. So this down candle becomes a 1 minute order block. That right there becomes a 1 minute order block. And then we look closely, you see something else. We have a fair value gap right there. Right there. And we're gonna call it, we're just gonna write number 1, and because it's a box, that helps me know that that's a 1 minute. It helps me know that's a 1 minute fair value gap. Now as you can see, we now have a fair value gap inside a bigger fair value gap on the same time frame. Now that's an inception model, and I believe, actually let's go check that guy out. He's called inception model. Let me see. He's called the red pill. You can go check him out.
Forex.com.
He talks more deeply about that inception model, and I think you can find that video somewhere. Blah blah. There you go.
All right, welcome everyone. Red Pill Trade
Okay,
here.
Red Pill. This is
If this is your first time watching my
channel,
channel,
I'm playing. So anyway, and as you can see, we do have an order block going downwards, down candle, and then we shoot up as a displacement, leaving behind a fair value gap where we can also set up another trade entry and shoot to the upside. So if you've also watched ICT, which is the guy I recommend you to go and watch, man, that guy is the bomb. So we do have sell side liquidity right there, right? And then we do have market structure shift right there. I like to call it a breakout structure right there. And then what you see, we have this high right here, which I'll call a buy side liquidity, BSL right there. And then we have these highs as well, which are also BSLs, but I'll just take that as the main one. So now this also becomes a catalyst of where price would want to reach to, right? And that can be like your short-term target, if you, or even this one can be also another short-term target. So this would have been a good entry. And how you'd have set up this one, OTEs, after the major OT has happened, I don't think like they're really respected to where price will come to that 0.62, but in this case it really got to 0.62, and that is why sometimes I have like this 0.58 to where I put my entry right before that 0.62. But all this is hindsight, so probably this would have been a mistrade if I put it there. Maybe this would not have been tagged in because of broker spread. But in this case, the best one would have been that 0.5 entry, or you don't have to worry about no fibs. You can just do it from that 5 minute, that 1 minute order block, right? That would have been the best, because to me that would take precedence over even this gap. So that would have been the safest place to take this trade. But again, another good area would have been just at that 1 minute order block. And you know, if you're a lone ranger ICT level, you can also take that trade from right there, and you don't have to put your stop loss all the way down here, because this sell side was already taken, right? So pretty much maybe right there or maybe right there, and that would have been a beautiful trade. That would have been an easy 2.89%, and then maybe close your trades, take some more, a little bit more up there, and then a little bit more up there, and you're done. Anyway, that was just based on hindsight, but I like doing that because it helps me with pattern recognition. So when you see it after it has already formed, now you can go into training your eyes to see it as it forms. But this is where you start. And so pretty much that's all I had for you for today. And I'd like to show you another YouTube channel that all you guys should go and really listen to this guy. And I know you're wondering why you're leading us to another YouTube channel. I'm doing this really to just spread out the awareness on what trading is really about. This is fun. If you love solving puzzles, if you love, if you love, if you like coming up with solutions to problems, this is a really good area to like kind of train your brain, and and it's actually like something that's alive because you're now dealing even with your emotions, because you're dealing with your money, and money is like your sweat is like your blood. So just risking like 1% of your account. Let's say you have $100, you're risking one. Let's say you have $1,000, you're risking 100 or you're risking $10, and then just to know that just like that it can go. So it takes a lot, and I think this is really good practice that everybody should have this skill under their belt. So if you're really interested to take your trading to the next level, I will send you to Mr. ICT right here, the Inner Circle Trader, and he has all these videos. My God, this guy is a legend. He has all these videos, and you can just go and start. And I think there's a place where he tells people how how you should listen to his stuff. So if you go to the 2023 ICT mentorship, I think on the first video he tells people like how you can go to his playlist, and which videos that you can start with. Wait, did he reduce his videos? There should be more than this. Oh, there's a lot more. Okay. He has a lot of videos, and they're all embedded in playlists. So go check him out, and there should be something in there for you. In the meantime, just hang out with me, whatever you can get. But if you've taken in all what I've said, then this is your next area of he's just the next level. He's an amazing guy. This guy, I've been listening to him for a while now, and all I know is derived from him. So do not worry about me leading you to other people's YouTube channels. Go get your bread for yourself, and in turn go out there and spread the news to someone else. So that's it for me, and I hope you learned something. Please leave a comment below. Let me know how I'm doing with these videos, if there's some more explanations you may need, or just leave a good message below, and make sure you like and subscribe, and I will see you on the next one. Trader Mawira, and I'm out. Thank you so much.